Welcome to the Investor Financing Podcast, where we interview real estate investors and lenders so you can learn all the secrets to getting your projects funded and scale your portfolio. Learn about fix and flip loans, BRRRR financing, rental, fix to rent, commercial, multifamily bridge loans, business loans, and so much more. And now, your host, Beau Eckstein.
Hello and welcome to another episode of the Investor Financing Podcast, and I'm your host, Beau Eckstein. And today we're going to talk about building a multifamily property and how to finance it. Okay, so first we're going to discover options with HUD financing. Then we're going to talk about private construction funds with PACE financing stacked together. And then we're going to talk about bank, credit union, and PACE financing structures. And then we're going to talk about best practices for structuring for higher leverage. Most of the times in development projects, we're always trying to get the highest leverage at the best price, right? Obviously, right? Because that's going to return the highest return to our investors when we're building projects like this. So let's first start in with HUD financing, when it would be a good fit, when it may not be a good fit. So it depends on where you're building, because they use the prevailing wage with HUD. So, you know, if you're building a 100-unit property in the Midwest, HUD's usually like the first place to look because it's the highest leverage financing. You can get up to 90% financing. It's a 40-year fixed rate product. I mean, you just can't beat it, but it doesn't fit every time because you have to use the prevailing wages. On the West Coast, we have, and the East Coast, we have, you know, high cost areas, right? So sometimes they have a cap on per unit price. So some of the higher price markets just don't work for HUD. But I always try to size it up with HUD first, because if it can finance with HUD and you have experience as a developer, it's the best way to finance, in my opinion.
You're listening to the Investor Financing Podcast. We'll be right back after this break. Are you looking for funding? Are you getting frustrated trying to find a lender? Visit investorfinancingpodcast.com and click the Get Funding button. Complete the simple form and schedule a free phone consultation with one of our placement specialists. We have a proprietary directory of funding partners that can help you get the funding you need. It's fast and easy to explore the options available for your specific needs. Don't wait. Visit investorfinancingpodcast.com and get connected.
But the next best thing is obviously a bank or credit union, right? The downfall to banks and credit unions is also oftentimes it's a recourse loan. So you have to sign you're guaranteeing the loan, versus HUD is non-recourse. So that's another advantage or disadvantage. But with bank or credit union construction financing, you can often stack on PACE financing to get up to 85% of costs. Now, not every bank will allow for that higher leverage, but it is available to you to get 85% of costs covered with putting your capital stack together like that. The other option is, if you don't really have a really big established track record, or you're just trying to move really fast on the project, there's a lot of private debt funds that specialize in funding construction for multifamily properties in particular, or other construction products for different asset classes. But multifamily, I would say, has the most hunger and appetite right now. Probably industrial is right up there with multifamily. So you can structure these type of transactions. And so really what we're going to do is we're going to look at the sponsorship and the development team. What have they done? Have they done similar projects? What does their portfolio look like? What does their personal financial statement look like? Now, if you're building an 8 or a 10 or a 12 unit property, that's different. Sometimes we have some local debt funds, like private money type funds, that can fund these things. But if we're building something a little bit bigger, a lot of times we want to try to get higher leverage. Instead of bringing pref equity, we might bring in PACE to accomplish this. So there's lots of ways to structure in these type of deals. And I wanted to give you a kind of a basic overview of the different structures on how to build a multifamily property. So HUD, we got bank, credit union, we have private debt funds, and then we have these hard money funds too. So those are the typical ways of structuring these types of loans. And then on the bank and credit union and private debt funds, we can also pack in or stack in the capital stack, PACE, equity, so that you can get up to 85% leverage. Now, a big thing with PACE, though, remember, is we got to get senior lender consent. They have to approve this, but it's getting more and more common for banks now having an understanding of PACE. There's almost 30 states now that have legislation intact for this type of financing. And PACE essentially funds the eligible green items of the build. So windows, some resiliency depending on the area, like in Florida, for example, roofs, sometimes the building envelope, the foundation, HVAC, plumbing. So anyways, that's how we finance and build a multifamily property. And those are the kind of loan structures that you're going to see most commonly. Prior to PACE, a lot of people were doing bank debt with some kind of pref equity piece, but quite honestly, cost of PACE is by far a lot less cost for you, and it's also non-recourse. So another big selling proposition for PACE financing. Thank you for watching another episode of the Investor Financing Podcast. Please subscribe and share this with your colleagues. I'm going to provide more and more content for you and awesome interviews going forward. Really appreciate you following us. Thanks a lot, Evan. Have a great day.
Thanks for listening to the Investor Financing Podcast. For show notes and useful resources, please visit investorfinancingpodcast.com. For questions or comments, email info@investorfinancingpodcast.com. If you enjoy our show, please share it with your network. Until next time.